Another wild day in the markets. Here we are taking a look at what's been happening. I will give you every single piece of information you need to know why it turned around and why we may not be at the bottom, at least according to some. This happens to be the S&P 500, and you could see at the end of the day in particular, the market starts to rise. What is that all about? I'll show you that and more. This is the four broad US indexes, and we can see that it has been seriously weak over the last little while, 5 weeks in a row, in fact, in the red. We have watched as there has been this attempt to get the markets going again, the bulls trying to take over, and then it gets turned around back into the red. And that's why financial expert urges caution, saying over time, buy and hold works. $7 trillion stock market slump sends 401ks tanking, and some joke their retirement accounts are now 301ks. You look at what's happening in the markets today, and everybody is starting to think to themselves, is this really going to happen? Are we going to see a true recession, a bear market, a depression, something worse? What happens with stagflation? What will we see? Is it going to be a repeat of 2000, 2008? Is it going to be 1987, 1929? And all of these questions. Well, what we do have are some facts, and I will show you those today. So many people, and I've seen the irresponsibility coming from other YouTubers who are saying, I want to be rich and I'm going to be rich, and I have been buying all the way down. That isn't necessarily something that you should be, trying to push on your subscribers, because they look to you for advice, okay? Whether it's financial advice or not. I know these other channels like to give that financial advice. Anyway, you're seeing the drawdown in the Russell, the Dow Jones, the S&P 500, and the NASDAQ. And for the NASDAQ, this is the worst drawdown that we have seen, even beyond what we saw in 2020. Then, going back all the way to the financial crisis. So that just shows you how significant this has become. Okay? All of these stocks that were perhaps not worth, you could argue, not worth what their prices were at, are really seeing the brunt of this all. You can look at this, the S&P 500 coming within literally 2 points of a bear market. And isn't it so interesting that the market basically couldn't find its way there and then bounced up higher? Is that so coincidental? Oh my goodness gracious. Well, thankfully, the plunge protection team came to the rescue. Oh, no. It couldn't be. It must have been a coincidence. But that turnaround, as we talked about, came as the Federal Reserve Bank of San Francisco President Mary Daly told Bloomberg that a 75 basis point increase in rates is, quote, not a primary consideration. So that's real key to understand. This is what's going on right now. The markets simply, they're pricing in, what's trying to happen right now is they're pricing in 50 basis points, saying, okay, 75 basis points derails that whole plan. But 50 basis points, okay, we can kind of deal with that. So 75 is now considered to be really hawkish. 50 basis points is, sort of normal, I guess. I don't want to call it dovish, but that's what they're expecting anyway. So there have been a lot of quotes in here, and essentially just saying that, I'll show you in a second, but Jerome Powell, other central bankers are starting to look at this and say, hey, we got to get inflation under control and we'll do whatever it takes. This is key. If you're watching what's happening in the markets, if you have money invested, 401ks, or maybe just any type of retirement account, or you're just an investor, take a look. S&P 500 forward 12-month PE ratio. Okay, this is interesting because you can see we peaked out in August of 2020, and now where are we today? Well, we look at the forward PE ratio, one measurement of how undervalued or overvalued. This is part of different valuation metrics that individuals, analysts, what they will use, and it's coming towards a historical normal. Can you believe that? Now, this is obviously skewed because you see some stocks that have come down considerably and things get sort of out of whack. But 17.6. 17.6, when you measure it this way, there are different ways to measure this, PE ratios, but in this particular way, 17.6. And it's somewhere between that 16 and 17 historically, depending on how far you go back. The dollar, I will tell you right now, has been doing very well, the US dollar. And this is beneficial for people living outside of the United States that earn US dollar. It looks real good. Wholesale inflation climbs 11% in April, remaining near 40-year high. So while we could see some aspects of inflation coming down a little bit, we are watching wholesale inflation. We are watching producer prices. We are looking at these things rising up. And that, of course, eventually puts pressure on consumer prices. First the producer prices, then the consumer prices. Here we have coffee. My friends out there who love their espresso, look at what's going on. Coffee frost, intense new cold front starting to move into all Maine 2022 Arabica coffee regions in Brazil this week. I mean, that's just showing us that we might be paying more for that cup of coffee. Okay, so now your Starbucks mocha frappa latte chino is going to go from $7 to $8 perhaps. I'm not so sure, but it's been going high regardless. Okay, this is interesting. This is the CEO, I believe, CEO and founder. I could be wrong on that, but of Airbnb, and this is his tweet. This is interesting. This moment feels similar to late 2008 when we started Airbnb. Lots of important companies were started during down cycles. Your conviction will be tested. Those that survive will be stronger. And I do agree with that. I think that's accurate. He's saying there's a lot of similarities. Okay, he's saying it's not exactly like 2008 financial crisis and this and that, but he's just saying we're seeing a lot of those patterns right now. And I do believe what comes out of it can be stronger. Okay, see what goes on. How overpriced are homes in your area? And this is interesting. This is NPR doing this, but anyway, you could look at how they come up with all this information. Boise, you're looking at, places basically all over. In fact, you could see the list on here, just showing you the percentage overvalued. Boise City, apparently 73% overvalued. And you go through this, and a lot of it, I mean, even Phoenix is on here, 46%. But what I find interesting is that, you look at a lot of these small towns, a lot of these small places that really just went absolutely crazy in the rise in prices. And then you could argue it is, in fact, overvalued. I don't know, that's based on different metrics, of course. What it is to you is all going to depend. Is that overvalued, or do you really love it? Sometimes you pay more if it's a personal residence. Sometimes you pay more than what it's actually worth in the comparables and so on, because it has some sort of something to it that you like. So anyway, that's different, whole different. And if you agree with me on that, let me know. Are you willing to pay a little bit more for that house because it has that extra something? What is that something to you? Okay. I have to talk about central banks really quickly, but this is the most important factor. If you stayed into the video this long, check this out. Central banks won't let 1970s style stagflation take hold. Of course, the Bank of Canada governor, he sees a soft landing and lower inflation. Isn't that interesting? Okay. So it seems like the Bank of Canada in their forward guidance is one step behind whatever the Fed says. Look at it. Watch. Fed Chair Jerome Powell, quote, "Whether we can execute a soft landing or not, it may actually depend on factors that we don't control." In addition, he said this is part of so there's a Bloomberg article written about that interview. Powell reiterates half-point hikes are likely in June and July. We are prepared to do more if needed. It says a soft landing is a challenge and will include some pain. So I'm interested to see what goes on, okay? Isn't it so interesting? All of this, all of this, to see the forward guidance and how all these central banks around the world work together. We're going to see Bank of Canada coming out with a statement, okay? Because Bank of Canada got the meeting in June. You've got the Federal Reserve meeting in June. They might go for a 50. They might go for higher. I doubt it. I doubt that. But I want to see what happens. And now we get some funny stuff. Adjustable rate mortgages are popular again. Should you get one? Do you remember the adjustable rate mortgages, the ARM mortgages? Oh, yes. In 2007, those were the hot thing. Bank of Canada's 1% policy rate is too stimulative. Yeah, maybe so. And we will see what happens. They need to get that up. And why? Because that's the only real thing that they can do to slow down the housing market. The housing market is ridiculous. It's the same thing in Australia. It's the same thing basically all over the place. But you look at the prices that people were paying for homes, and that was only affordable because of what's happening with interest rates. When interest rates, I saw the interest rates at 0.99%. And things were just really ridiculous. Okay? There's no reason for that, but that's where we were at. And now today, things have certainly changed. If you found this video informative, just hit that thumbs up button. Seems to be a disagreement among the subscribers. Do I show my face? Do I not show my face? I've had people say that they get almost like, some, I don't want to say a seizure, but they get some erratic behavior, like a triggering. Maybe they develop a tic when they see me on the screen. Other people say it just doesn't do anything for them. Doesn't float their boat. Other people say it makes it a lot better. That way I can look at the camera. We can have an interactive sort of experience. Other people, whatever, who knows? I don't know. Whatever you guys want, it's up to you. I really don't care. I'm behind the microphone. I'm giving you a thumbs up regardless. If you want to support the channel, hit me back with that thumbs up. It's right down there. I'll see you on the next one. Take care.